Spotlight, GreensKeeper, and Michael McCloskey, Canadian value investing firm born from Buffett's principles. Hello everyone, I'm back again, granted, once again with my PC troubles. The PC issue seems to be unwilling to escape me, and I expect further minor delays. My apologies for that. It was Thanksgiving weekend here in Canada, so I'd like to wish you all a happy Thanksgiving, and thank you so much for reading my letters. Today's letter may be a little closer to heart, so I will try my best not to let my biases influence my thoughts, but please keep in mind my positive feelings for the firm. I want to dive into Michael McCloskey and GreensKeeper Asset Management. This value investing pair from Oakville, Ontario, has an impressive track record of 9.7 annual % compounded returns since its inception in November of 2011, against the TSX return of 6.74% for that period, and 13% for the S&P in Canadian terms. Canadian because since inception, there's been approximately 27% Canadian devaluation against the American dollar. And now today, with over $167 million under management, at least according to the latest annual report, GreensKeeper has been a standout performer. Of course, as usual, we have our clear disclosure that all of this content is made for entertainment purposes only. It's not meant to be construed as investment advice. Please consult your financial advisor who knows your situation and can better advise you. So, GreensKeeper. Before we dive into this firm, we should meet the protagonist himself, the one who started it all, Michael McCloskey. Michael's path toward the fund is quite a fascinating journey, but I'll let him say it himself. Some 15 years ago, I decided to leave Bay Street behind and started managing my own money full-time. My sister and brother then gave me all their money to manage. Next came mom and dad and a few close friends. When you manage money for those whom you care about most, it may not guarantee results, but it certainly guarantees focus and effort. Fortunately, there has been happy with the results that flowed from their trust and placed in me. I created GreensKeeper as a vehicle to allow others to have their money invested in the same way as I manage my own. Michael grew up primarily in Canada and is one of 3 children. His dad worked for a multinational company, so Michael's childhood consisted of frequent moves. In his first 10 years, he moved more than once a year. This experience shaped him as he struggled against his more introverted, shy nature to adapt to his surroundings. Perhaps because of this experience, he has become comfortable being an independent thinker today. From 1995 to 2002, Michael practiced law and built his experience specializing in corporate finance and mergers and acquisitions. At Arid and Burles LLP, this experience duly built his foundation in securities law and legal writing. He credits his education in law and practice for both helping him develop the skills necessary for investments, such as paying closer attention to details and understanding corporate actions. Joining as an associate lawyer, he became a partner in just 4 years. He spent 2002-2010 timeframe at Sports Securities, now called Cormac Securities, as an investment banker, also making partner there. He participated in the management-led buyout of the firm from founder Eric Sprout. He worked there and focused more on initial public offering, IPOs, debt and equity financing, takeover bids, and M&A advisory assignments. In 2010, he left banking to launch GreensKeeper Asset Management, initially managing his own and his family's portfolio, and then launching a value fund in November of 2011. It seems like also in 2023, GreensKeeper registered in Texas to manage for their U.S. side. As for his education, he earned a bachelor's and honors in mathematics from the University of Western Ontario, followed by an MBA honors from the Scrooge School of Business at York University and a JD from Osgoode Hall Law School. From his words, the reason he went to law school was because he didn't take school seriously and had bad grades, something that his daughter, who got into business school on her first try, will never let him forget. Admitted to the Ontario Bar in 1997, he holds a designation as a Canadian investment manager from 2009, Associate Advisor Representative 2011, and Advisor Representative 2014. Today, he's the President and Chief Investment Officer of GreensKeeper Asset Management. He's a proud father of 2 daughters, now adults, lives in Lone Park neighborhood of Mississauga, Ontario, although likes to hide out in the winter of more south. You may have wondered why the name GreensKeeper. Perhaps a punt on the greenback term, or why a value investment firm? Well, the name is inspired by value stocks are about as exciting as watching the grass grow. But have you ever noticed how much your grass grows in a week? Christopher Brown, Tweedy, Brown Company LLC. Some may say that value investing is slow and doesn't work. However, just like Michael's predecessors in the Buffett Disciple network, He continues to prove that with patience and work, it yields great results. Moreover, it opens up the way for metaphors such as tending to his gardens of stocks and plucking the weeds out of his portfolio. The team. You're already familiar with Michael, but over the years the fund has grown and the team has expanded. Michelle Tate is the executive assistant, joining the firm in 2017 with over 16 years of administrative experience, now approximately 24 years, and holds an education background from Samnesa College, where she earned a degree in legal administration in 2005. The most recent addition to the team is Michael Van Loon. He joined as a financial analyst in 2023 after previously completing an internship at the firm. GreensKeeper has on occasion hosted summer internship and proudly displays its tenures as a stamp of support. You can notice many tips on their website from the years of 2020 to 2024. He's a graduate of the Ivy School of Business at Western University and is studying to become a registered portfolio manager. From my understanding, if God forbid there was a tragedy, let's knock on wood, he would be a successor or a man in standing for GreensKeeper, of course pending registration. When I had the privilege of speaking to Michael, he had nothing but the highest words of praise for the younger Michael, naming him absolutely outstanding. Perhaps most surprising to some, one of the biggest compliments to the firm comes from Michael's own brother. James McCloskey, as Michael describes him, is a perfect addition and opposite personality to his own. Michael is more introverted while James is more social and really good at sales. James also seems to work as a real estate agent in the Mississauga area. Pillars. Studying Buffin's disciples, many of the foundations of the firm have their own distinct flavors. Michael's GreensKeeper is built on alignment of interests. Michael and his team share Munger's belief that examining the incentives reveals the outcome. They want to remain on the same page as their clients, so every member of their team personally invests 100% of the portfolio in the fund. Michael personally has over 70%, which is 100% of his investable savings. The rest, I theorize, is housing or personal assets. Discipline. The structure in the philosophy section remains unchanged. To be included, a company must pass a rigorous process and joins the 20-ish stock portfolio, which also means something needs to be sold. The firm also has published over 50 scorecards and held over 15 annual meetings, demonstrating commitment to its partners. Temperament. GreensKeeper has a mental advantage as they are not in a rush to buy a company. Even after studying a business, they are not compelled to buy it, even if the work it put in leads them not to purchase an interest in it. He has many quotes showcasing the framework of his temperament. It's waiting that helps you as an investor, and a lot of people just can't wait. If you don't go to the deferred gratification gene, you've got to work hard to overcome that. Charlie Munger. The formula of getting rich over time is clear and available to almost anyone. Use debt sparingly, consistently spend less time than you earn, invest the difference prudently, and let time and compounding do the magic. And many, many more. Transparency. The firm publishes scorecards with thoughts, analysis, reports, and investment letters to communicate about the fund's actions. The very first page displays the performance net of all fees and expenses, having full transparency with their partners. An investment fiduciary. They are legally required to put the client's interests above their own. Philosophy. In GreensKeeper's own words, we approach equities with a value investing mindset. The stock market is prone to emotional mood swings. Our job is to research, be objective, and pronounce when attractive opportunities present themselves. What this really means is that the firm focuses on opportunities that they can truly grasp. They would like to invest in a few niche businesses that they have developed expertise in and still remain in their rails. With a few caveats, one moment. Michael seems to have historically acquired high-quality businesses with a lean towards payment services. For example, holdings such as Pfizer, Visa, American Express, pharmaceuticals such as Merck & Co., Vertex Pharmaceuticals, Pfizer, Novo Nordisk. Of course, they have sold out of some and bought others, but you can check that out in their annual reports. Not to say he hasn't ventured out of this. We pivot to where the value is, but he has always maintained a position in those niches. The fund also focuses on owning maximum of roughly 20 stocks, but is open to owning companies worldwide. The fund has an aversion to leverage and intent never leads to become a forced seller during bad times. The fund also prioritizes the preservation of capital, continuing assertion of risk of capital. This fact also means that when asserting risk, GreensKeeper team rejects the efficient market hypothesis, measures risks in terms of what the risk of permanent capital loss. The fund operates under, I would rather lose half our clients than lose half our clients' money. Taken from the annual report of Jean Merle Evilard, First Eagle Funds. Michael likes to answer the question, what does GreensKeeper do all day? He says all they do is read, read, and read. This is a competitive advantage. His team is consistently devouring information and enhancing the perspective of the world. In addition to reading, Michael has also screens that appear attractive on paper, which leads him to more reading. He does a deep dive and tries to study a company so he can answer the three questions. Do we understand the business? Does the business have attractive economics, durable competitive advantage? Is the management shareholder friendly? After that, he ensures that the company is selling at a margin of safety. Yes, the same Ben Grant principle I refer in the letters. Also, if it's too expensive, just wait. Be comfortable with the inactivities and other asset or value investors, and monitor the markets. They can get emotional, and sooner or later, something on your watch list will be within the margin of safety, leading to another deep dive. I think that's perfect to uncover Michael's temperament expertise can be seen in his quote here. Purchasing stocks when they're scary is like running towards a fire. Like first responders, it takes training and mental preparations. What I learned. Examining Michael's letters, speeches, and writings reveals a great deal. In Poor Charlie's Almanac, the author asserts the repetitive is a tool to enforce good ideas and is necessary to absorb lessons truly. Reading many of Michael's work was such as an experience to me. We are both inspired by the same founding father in the investing world. We are both similar texts and influenced by similar ideas. Let's hope I'm controlling the various biases I'm under the influence of. Nonetheless, many of the ideas he introduced me to were new and made me think a lot. For example, Michael discussed his experience in mergers and acquisitions, specifically his exit from CVS Health, which taught him that the buyer usually loses in most M&A transactions, particularly when significant financial leverage and undervalued shares are issued to make the deal happen. Prior to reading his piece, the only other time I spent thinking about merger and acquisition was while studying the rise of private equity, especially in the 1980s, and also when reading Joel Greenberg's book on investing in special situations. However, I did not gain any groundbreaking insights. Rereading his experience led me to take a closer look at merger and acquisition treats shareholders, and what side of the agreement you want to be on. I'll definitely be more cautious about future M&A. Another really interesting idea I had followed Michael's analysis of his meta position. While not intending to rub salt in his wounds, I learned a great deal from his experience. Michael's first purchase of Meta stock back when it was still called Facebook and held it as it grew into a large media empire. However, in 2022, he ended up selling near the bottom. For those who don't know, since the 22 bottom, the stock is approximately 7x'd. He has since written his reflection. Personally, I remember the time very well. My friend won't let me forget it as we discussed the stocks, and I expressed that I put it in my too-hard pile after having trouble wrapping my head around their company's perspectives and strategy. Monish Pabrai went on podcast and called it an easy double at the time, and there was huge pessimism for the huge metaverse spending. Mike has reflected that he is definitely affected by the huge stock drawback, with the peak-to-trough decline of 73.7%, although I'm pretty sure he referenced selling it at 66%, but many of the reasons he sold were still red flags in the company. Without rambling on further for lessons takeaway, I think the last highlighted lesson is one that keeps coming back to me, which is when to sell companies. GreensKeeper believes that some of our biggest mistakes in the past have been selling our companies because we thought they were fully valued. For example, Microsoft in 2015. The lesson is that compounders are like the geese that lay the golden eggs. They are nurtured, not culled. I think this lesson is that you really need to grasp by studying companies that, unlike your grass lawn, you need to trim as it gets long. You need to let some corner of your lawn really grow. I know, bad metaphor. I know perhaps some grass is meant to grow long and left alone. I don't know. What I'm politely stealing. As I spend more time studying individuals in the field, I have made it a habit to shamelessly copy ideas that I find most useful. I believe that combining various elements that enhance your work will lead to an overall improvement process. For me, and I hope that nobody copy from mine's too much. Sam Walton built arguably the best retail store in all time by studying other retailers and trying things that work in other stores and his own stores. For Michael, there are many things that can dig from the investing side, but I'm going to focus on his off-investment activities that really inspired me. One of his efforts in hiring summer students and promoting interns to positions within the firm. I think it's such a fundamental part of building up our society, and the mentoring process is one that not only allows one to learn by teaching, but also helps improve the community around them, as well as give a hand to someone who's trying to build their life. I think it's within my sight that within the next 30 years, I'll be able to replicate that act. Another component I learned from listening to his AGM. By the way, the AGM recordings are available online and are a great learning resource. During his annual meetings, GreensKeeper spends time walking through some of the fund's best ideas step by step as a high-level thesis. I think it's an excellent tool to make your clients feel like they're really part of the process. Moreover, opening the floor to questions allows clients to directly contribute to the process by asking the questions, each unique in terms of its position in the portfolio. Speaking of the question period, much like Munger and Buffett, GreensKeeper opens the floor to questions to their partners. And through this process, there are things that take away. One is such as the craft of answering the question. Michael might claim to be an introvert, but listening to him handle question after question, especially tough ones, you can see the art of how he reassures the clients while also remaining true to himself. One example comes to mind where Michael was directly asked if he would sell a position in Israeli stocks. He diligently answered by emphasizing with the client, explaining that he has done for special requests for the clients, but then following up by walking through that he would not sell anything as it goes against his value principle. And for me, that really struck out for me. Conclusions. Well, wow, thank you for sticking with me. I think that if I weren't limiting by writing, I could have turned this into a mini novel. So there's still a lot to highlight and take away from Michael's work. However, I don't wish to bore you too much and respect your time as well. And I think many conclusions should be made by readers themselves. Some of you may be reviewing Michael's returns and the work put in and not be impressed and don't seem worth it, especially with how slow the capital building process is or how difficult it is to become an amount of work dedication needed to be successful. I'd like to share my personal opinion that with the next 10 to 15 years, very interesting in the financial markets, it will be a very interesting time in the financial markets, and that active management, if done correctly, will have an advantage over market averages. However, this will come at the cost of a lot of hard work. I'll let Munger put it into words that were looking for an easier way out. Forget it. Investing is not supposed to be easy. Anyone who finds it easy is stupid. And I will let GreensKeeper steer you in the right direction. The difference between long-term greatness and mediocrity is in the spectacular moments. Yes, they help, but most of the fight is carried by consistent execution and avoiding critical errors. Compounding wealth successfully requires a combination of prudent investment, reassuring diversification, and a strong sense of humility. Special thanks to Michael McCloskey. Thank you for your help and advice, and I personally have a lot of fun reading your work. And it was even more enjoyable during our chat. Thank you for taking the time, and I will one day pay it forward with me and making your work public. Hope you all had fun reading this and maybe learning something new. Happy belated Thanksgiving. To our American friends, happy early Thanksgiving. I hope the rest of the worldwide audience, happy Thanksgiving whenever it is. And I hope you have a great one. Cheers. It's been Daniel and 18 Degree Partnership.